Hello, my name is Philippe Cloutier, President and CEO of Cartier Resources. We're listed on the TSXV with the ticker symbol ECR. And our focus is in the Abitibi on gold. And that's what we're doing. We have an ambitious 100,000 meters, 600 diamond drill hole program that we initiated in August. And we're firing on all cylinders, and I hope to get across to you the value proposition.
Philippe, good to see you, sir. Right, it's been a while, so I'm going to indulge myself slightly, but just reminding everyone here about the setup for what we're going to talk about, which is obviously the recent drill results on Cadillac, and I guess into the future with what you're going to be doing there. So can you just maybe remind us about the kind of strategic rationale behind, you know, I guess what would you call it? The agreement with Exploits Minerals with regards to the kind of Fenton, Benoit, and Wilson place.
So let's talk about that for a minute. Exploits Discovery, I think, wanted to introduce themselves to Quebec, and we had three very nice projects: Fenton, Benoit, and Wilson. And they were essentially non-core for us because of our flagship project, which is Cadillac, right? And so we didn't want them sitting on a shelf. We wanted a very good and reputable operator. And I know Mr. Swiniga very well, and we struck a deal. So those projects will get the benefit of really good work done over the next few years while we focus on the Cadillac project along the Cadillac Fault.
Right, and so why did you hang on to Cadillac and give away the others? What was the deciding factor for you?
Okay, listen, we had our epiphany moment, our eureka moment in late 2023. Listen, the Abitibi, you know, the first mines were discovered in the 1920s. And now we're in 2025. There have been hundreds of mines, hundreds of millions of ounces of gold. It's the birthplace to major senior gold producers like Agnico, Barrick, and Noranda. And what defines a senior producer is their ability to, discover mines, but a cluster of mines and a mining camp. Which brings us to us. We have Agnico Eagle as a senior partner, as a strategic investor. And in 2022, we were able to consolidate a very sizable position along the Larder Lake Cadillac Fault, where there are no less than 4 mining camps, starting in Noranda, moving over to the LaRonde camp, the Malartic camp, Val-d'Orga. And we believe that Cadillac, our project, is the next mining camp. And we discovered that in late 2023, and in 2024, we went to the ground. We ground truthed all these historic discoveries, and we then generated a 100,000 meter diamond drill program, which we presented to Agnico, and they said, you're right. You know, you've got to go about this very aggressively and dynamically, and your vision has to be to demonstrate that there's a mining camp there. Not one mine, but a cluster of maybe 3 or 4 mines. So we're not looking at 3 million ounces. We're looking at a potential of 10 to 15 million ounces. And the diamond drill program has to be tailored to demonstrate that. Hence, 100,000 meters, 600 diamond drill holes over that 15-kilometer stretch on the east and west extension of the past-producing Chimo gold mine. We started that in August, and I think this morning was our 3rd press release, and it's confirmation. It's proof of concept. So that's my immediate wrap-up of why we're focusing on Cadillac. That's my answer to your question.
Okay, so there's a kind of structural geological continuity there, and obviously others are just I guess displaying scale potential there. But I suspect obviously the associated infrastructure is also going to be a benefit to you. In terms of the deal, the Exploits Discovery deal, in terms of what did that look like? What does that bring in? Because it allows you to focus, yes, but what cash did it bring in, and what do you think you're going to be doing with that?
We have a 4-year earn-in. Well, they earn up to 100% of the Exploits people on Benoit, Fenton, and Wilson, and they have to, I think, cash out $1.7 million over the 4-year period. Up to or nearly 10 million shares of Exploits. So if they have success, we have success. and they have to expend in the order of $12 million on the 3 projects. So it's field activity, it's drilling, it's resource development on their part. And while they're doing that, obviously we're focusing on Cadillac because that's the main story at Cartier.
Obviously, we spoke with Jeff back in September and spoke with Newfoundland Gold recently with regards to the deal, which is, I guess, funding this, and the fact that Jeff will be sort of, I guess, selling down Newfoundland Gold stock over the next while, shall we say? So, for you, how do you kind of maintain control in case of anything goes wrong with that deal there, which is the feeding into this? Have you raised money? Have you kind of taken control of your kind of your own finances?
Well, that's a very good question. On the back end of our design of the ambitious program on Cadillac, we were able to attract $12 million. And so therefore we're fully funded for this program. Because Cadillac sits within a 30-minute drive of the Val-d'Or mining camp, proximal to qualified workforce and infrastructure, we're able to strike an all-in diamond drill program for $110 a meter. And that is because of the proximity of the camp and qualified workforce. Because at the time we raised money, there wasn't a lot of, voluminous drill contracts being handed out. And so it was perfect timing for us. We locked in those prices for the next 2 years. So we're going to get a lot of drilling done on the Cadillac project. Our partners are going to get a lot of drilling done on our northern projects, which are Goldfields' backyard mining country. And with rising gold prices, I think we're set to attract a lot of attention, but more so because we've set in motion a 5-prong component program. The diamond drilling, obviously, and the results you saw this morning. Metallurgical testing in order to assess and see if we could not do toll milling along the highway and understand the metallurgy of our ore. Environmental baseline studies to further and initiate the permitting processes for an eventual production. Then we've also have updating of the mineral resource assessment, and finally updating of the preliminary economic assessment. The last PEA we did on the project, we used a long-term gold price of $1,750, $1,750 US. Obviously, we're in a totally different economic environment, and now we're seeing the potential for open pit approaches as well as underground approaches on the project. And I mentioned the metallurgy. One way to reduce the capex substantially in building Cartier in Cadillac is initially going towards a toll milling scenario. And there are several mills along the highway. There's the Agnico mill at Goldex, at Canadian Malartic, and at La Ronde. There's the El Dorado mill at Lamaque. There's the West Dome mill at Kena. There's the Westwood mill at Aya Gold. It is a very nice setup for Cartier and would-be miners along that highway.
It's really interesting to see the change in strategy. Like for the past few years, we've all been talking about, there may be the risk associated with single asset companies, or you need to diversify your risk just in case something goes wrong. These are different times, as you say. You have in the process of offloading three of the 4 assets. You're going to get focused here. The price differential in gold price obviously makes a heck of a difference. But all that said, you still need to be clear about what the business model is. And so we've seen lots of companies think about getting into nearer term revenue production. You're giving us some clues here in what you just said about your attitude to that. Can you describe what the business plan is? Could you tell me what the things are? Resource updates and economic studies and metallurgy and drilling is great. To what end?
To the end of making sure we have the maximum amount of options on the table when the opportunity strikes. If somebody comes in and says, "Phil, step aside, buddy. We're going to take this to the full 9 yards." Okay, fine. And then we've done all the drilling that we need to do so as not to surrender untested value on the project. However, we've also set in motion all the the parts, the different moving parts, to be able to make a decision and say, listen, can we put this thing in production ourselves? There are ramps. There's a ramp towards that the old production site. There's a shaft that goes out onto the past producing gold mine. And now we're seeing open pit potential left, right, and center on this project. So if we're able to raise our capex in the vicinity of 120, 150 million and even more, and lower lower the capex and increase our market cap, then it's credible for us to say, let's take it ourselves. Let's go into production ourselves. But the basic business plan, obviously, is to set the stage and demonstrate that this is a mining camp, a multi-generation revenue generator for either a senior producer or an intermediate producer or even a new producer such as us.
Right. So in which case we better get into, obviously today's press release gives us some clues, but I've got to ask a question first, just in terms of, again, setting the scene. In terms of that, the North Contact Zone, NCZ, it hosts, 3 parallel gold systems at the moment? Can you elaborate on the kind of structural controls, continuity modeling, etc.?
Absolutely. The Cadillac Fault rips through that past producing gold mine, and just north of that, we're seeing several splay faults. And this one that we're working on is barely a few hundred meters north of the Cadillac Fault. We call that the Heva Fault. And historically, there was only one zone, one high-grade vein system. In this recent drill program, we've intersected 3 parallel stacked vein systems, and they all appear to be showing high grades and wider envelopes of lower grades. And it's near surface. There's an outcrop. There's barely 5 meters of overburden cover. So we're actually tackling this and drilling it as if it would be a starter open pit, to then have access to much deeper ore that we're not drilling for now. We're limiting all of our drilling in this program to 300-meter vertical depth.
Right, and so given the kind of intercept geometry so far and the alteration patterns, do you think you'll find that this comes to surface at some point?
It does come to surface. It has been seen slightly off to the west in one outcrop, and we never had access to this ground until mid-20 or early 2022, and then we compiled all the historic discoveries, and there's 11 additional targets of this type or similar type along the 15-kilometer stretch. We only started with the contact target because, well, amongst others, it was accessible for summer drilling. And we've kept some of the more sexier targets, which happen to be under more, swampy areas that we prefer to drill in the winter.
Okay, so given you've done this 100,000 meter drill program, and you've got an upcoming resource estimate or an updated resource estimate, what's the balance between resource conversion and new discovery work?
That's a very good question. That not only are we doing new discovery type drilling, we're increasing resource type drilling, like for instance on the contact zone, but we're also doing verify AI type targeting. So that could provide us with an entirely new setting, stuff that artificial intelligence says, well, look, our machine, our algorithm says go there. And so we've surrendered a bit, if not a lot, of our ego as a geologist to go out and target these verify AI targets. Another part is, well, as you've mentioned, growing the resource around the contact type targets. And we're also drilling ground in between the historic discoveries because there was a historic property boundary. And that may yield new discoveries as well. So we're trying to strike a balance between growing the resource and making sure we test all of this ground in one first pass with that 100,000 meters and those 600 diamond drill holes. We have to assume that there's going to be a disaster, and a price of gold may fall, and our industry may may not be as popular in the next a year or so. So we want to get all of this done. Gold in the ground desert rust, right? So we want to park this value while we're doing the dynamic environmental baseline studies and metallurgy. So we're setting the stage for the most optimum amount of alternatives going forward.
It's funny, isn't it? Once you come off of a rather long period of depressed markets with poor access to capital, you're just a little bit more cautious, I think. So, certainly when I speak to some of the old timers about it, for sure, because the sun is shining for sure, but you probably need to get with one eye on the future. You mentioned something earlier about potential for maybe open pits. So in terms of, have you or are you going to be looking at any kind of geotechnical, hydrological data to kind of work out if shallow mining scenarios are possible and when?
Yes, that is included in the PEA work, the update, the MR, the mineral resource update, because we're looking at high grade and low grade scenarios, block modeling and DSOs and so on and so forth. The environmental baseline studies are assessing these things as well. We're looking at scenarios where you could produce cash flow in the shortest order possible, which is within arm's reach for something like Cartier. If you're in a remote area, that's not possible. If you're in an area that doesn't have access to qualified workforce and the bells and whistles that we have here in Quebec, that's not possible. But we do have that, so why not gun for it?
And how much precedent is there for open pit mining along the Cadillac Fault?
A lot. There's actually the El Dorado people have done. The Sigma mine was open pit at one point. Canadian Malartic is a huge open pit mine, one of the biggest. There's the Detour Fault just north of it. And more what people are doing is looking at hybrid scenarios where they're using a starter pit to then have access right in the bedrock to do underground mining via a ramp instead of sinking a very costly and timely consuming shaft. So the scenarios that are being looked at right now are scenarios that could position this project to be a moneymaker in the short term.
Right, and obviously with I think we've seen a lot of, or heard a lot of companies talk about the ability to kind of try to bulk sample, because it means that potentially revenue generating with some of the tolling agreements in place, and even try and move to some kind of test mining assumption. Again, is that part of what you're going to be looking at? Because I was just so conscious that this has very much come out of an exploration type company, and I appreciate Agnico as a big shareholder in this, and I'm trying to work out how much can you lean on Agnico or others to understand what this could be.
Yeah, we have the benefit of Cartier operating in the Abitibi is there is a wealth of examples or case histories that we could draft on. For instance, the Windfall people, Cisco Mining, when they were, before they sold to Goldfields, they had initiated, as you explained, underground exploration test mining, right, prior to applying for the longer term full underground operation permits at Windfall. When you have historical ramps or access, you can do that, which kind of it accelerates the process. So you have to run a two-tier process, one for underground exploration to accelerate access to the ore, the testing and bulk mining and bulk sampling. And then while you're doing the full-on, full production scenario. And again, there's not only, the case histories, but there's a wealth of knowledgeable contractors and consultants here that can do that work. And when you're gunning for a project that could be brought into production relatively quickly with a low capex, we've got that going for us. And there's some junior competitors are doing that just right at this moment. I'm loath to promote them, but why not? Amex is doing that, and I think they're doing they're wise to do that. They're not wasting time. They understand that time is of essence, and we understand that as well, and that's what we're going to be doing.
Yeah, no, we've seen that. I think with Amex, they're talking about if they can execute on what they think they've got. It's talking about $280 million a year cash flow. Same with Newfound Gold, $180 million cash flow for a year. You got to put yourself in that sort of company, I suspect. Just funny thing someone said to me the other day, said, new to gold, as a lot of people are at the moment, new to investing in gold. And they said, so when you kind of find this gold and you see it, Do you just kind of follow where the gold goes? I was trying to explain, and I say the reason I'm laughing is because you talk about visible gold frequency, right?
Yes.
So I'm sure that's not the vectoring tool that you use, but is there something to what he said?
Visible gold occurrence is not the norm in our industry. When
No.
it happens, that's fine. On Cadillac, there's actually there's two generations of gold occurrence. One, the visible gold in the bull white quartz veins and the smoky quartz veins, and then there's the telescopes within a system that has more disseminated gold, but has a lot more ounces, right? And so that's this system at Cadillac and elsewhere along the Cadillac Fault that around that the Agnico people and El Dorado people have. Our system is just as well behaved. So we're seeing consistency, we're seeing repetition, and we're with that we're able to build volume and build ounces relatively quickly. And that is one of the reasons we decided to shift gears from having a 10 or 20,000 meter diamond drill program to one that's 100,000 meter diamond drill program. The standard or typical junior will drill 5 to 10,000 meters per year if they're lucky. We're drilling an order of magnitude that. We're in the 100,000 meter range, and it clearly is in line with our target, demonstrating that this is the next mining camp along the Cadillac Fault.
Okay. Again, you're able to kind of look at what else is happening along the Cadillac Fault and use some of that data for some of your early stage assumptions. And I know you talked about getting into the metallurgical and process development stuff yourself. Can you give just to help us folks who like to try and work out what's possible? Historic recovery rates were around 90%, but variable.
Yeah.
So what can you tell us about what else is going on along the fault?
Okay. Well, we decided not to arm wave when we produced our first PEA. We used the historical recovery rates, and the historical recovery rates at Chima were 93%. But they're 93% essentially because they didn't have a mill on site at the time. They were shipping their ore to a faraway mill, and that mill was not calibrated for the Chima ore. When they finally were able to bring a mill on site and understand that they had to do different type of level grinding and for longer periods, they were going to hit the right amount of recovery, which was typically 96 or 97% in our part of the world. But then the markets fell. That was 1997. So the mine closed, not for lack of ore, as we all know now, but essentially because it was a very dire and dismal economic environment. Gold was at $275 US. Now gold is tipping $4,000 US. Metallurgical techniques and mining, sequencing and mining techniques were what they were in 1997. Today, they're much more different. There weren't as many mills available along the highway then, and now there are. So it is a much more positive economic environment to consider building something at Chimo and at Cadillac. And we intend not to waste time. We want to be very aggressive, very dynamic with the type of work we're doing. And so people are saying, Phil, why you're doing all this work, the drilling, metallurgy, environmental baseline study, resource? Well, it's because it has to be done, it has to be sequenced, and it has the benefit of providing a very robust and dynamic news flow for our investors. I mean, we're press releasing every second week now. And I don't think that's going to let up. I think that's going to be the case for the next 18 months. So you're going to get. So I think
there's a lot coming.
I think all of that is value proposition, and I do believe that we're an investment opportunity because we haven't. In the last 2 years, we haven't done a lot of marketing, arguably because we haven't done a lot of work. Now we've set the stage, to do the right amount of marketing, and I think we will appreciate.
Okay. But you obviously what you seem to be doing is honing in on the kind of commercial opportunity here rather than the pure geological. Take that the right way.
You said it the right way. Exactly.
Yeah. Okay.
We're not a research institute. We're actually we're looking to hit it out of the park.
Show me the money, I think the phrase is,
Well,
which I like.
we're cashed up. We're cashed up to the tune of $12 million, so we're fully funded for the program. There's a lot of money flying around these days. You know, you don't want to touch stupid money. You want to touch intelligent money. You want to touch money that is in line with what I've just described. You know, setting the stage for success, the success that I think Cartier and Cartier shareholders deserve to have.
Okay, right. And I think what I'm trying to say is that the market is rewarding people with this attitude at the moment. And why wouldn't it with gold prices like this if you're talking about a nearer term revenue type setup? So I appreciate that. We haven't actually talked about the specifics of the announcement today. Can you do you want to kind of run through what we should be looking at, what is important and what in the news you put out?
Okay, what's important is we've taken a historic showing that had one drill hole. I think it was drilled by Chalice. And then O3 came in, they drilled 3 drill holes around it. And they demonstrated that, okay, this got meat on the bone. And then we tackled it in 2024 and now 2025. And it's just growing and growing. And it's showing, you know, impressive grades, like 11 grams over 9 meters, and, you know, an ounce per ton over 2 meters, but stacked. And the entire width of these stacked veins is, I think, 50 meters wide. And all 3 of those veins have ounce per ton material over, you know, metric widths. And it also has, you know, very wide, moderate grade intervals, and it's at surface. So this thing, and I think we've just discovered the tip of another iceberg on Cadillac. And our goal is to maybe, or hopefully, discover 5 or 6 of these over the 15 kilometers. And then we'll be able to rate, rank, and prioritize the next phase of drilling. But by then, I hope we'll be in a totally different space. Listen, I'll leave you on this. I think Buffett once said, "There's one woman, 9 months, 1 baby." You can't put 9 women and expect 1 baby after a month. And this thing is almost 7 months pregnant. We're seeing the light at the end of the tunnel. I think we're going to provide the market with some really interesting news flow over the next 5 to 6 months. It's front loaded or engineered to have this company at a different level by the end of 2025, early 2026.
Philippe, I look forward to speaking about the next announcement, and well done for being funded to do what you want to do. See you soon.
Thank you very much, sir.